Well, the theme of 2021 clearly seems to continue to be that markets will continue to remain choppy. US indices closed lower despite an earnings beat from companies. Mind you, Bank of America beat estimates, so did P&G, so did Morgan Stanley, and despite that, all three US indices closed lower on Wednesday. In fact, out of the 44 companies, almost 1/11th of the S&P 500 have declared their December quarter earnings, and out of those, 3/4 reportedly have now beaten analyst expectations. Now, despite that, the Dow has fallen for a fourth day in a row. It's down almost 1% in trade on Wednesday. When we look at the S&P 500, also not too far behind, almost 1%, 0.97% lower, and the Nasdaq was down over a percent, 1.15% lower in trade on Wednesday. The Nasdaq is now sitting around 10% from its November highs. When we move on to Europe, well, UK December consumer inflation numbers came through at 5.4% versus the estimated 5.2%. That's the highest since 1992, and the German 10-year yield on the back of that turned positive. That's the first time it's turned positive since 2019. So despite all these factors, European stocks rose, and that will mean that the DAX was up 1/4%, the FTSE was up 1/3%, the CAC 40 was up over 0.5%, and the Stock 600 also up 1/4%. Largely, the gains were driven by mining stocks, which were up 2.7%. The tech-heavy stocks or indices have obviously been the hardest hit. Of course, growth stocks will always be the hardest hit in increasing interest rate environments. So tech fell almost 1%, 0.9% on Wednesday in trade. Well, Asian markets too were a mix yesterday, but largely lower. In fact, the Nikkei was down almost 3% yesterday. The ASX 200 down over 1%. The Hang Seng was the only one holding on to an absolute flat line. In fact, up just 6 basis points in trade yesterday. However, today morning, there has come news from China that there is a possible interest rate reduction in China, which will mean that stocks in China saw a bit of a bounce in early trade today, and that has kind of had an impact pretty much across Asia. So the Nikkei is up almost 0.5%, the Shanghai is up over 0.1%, the Hang Seng is up almost 2% in early trade today, and the ASX 200 is staring at a flat line again of just lower by 6 basis points. The Kospi is up around 15 basis points as we speak. However, the SGX Nifty futures, which typically determine how Indian markets will open more than the larger Asian pairs, is down around 0.4% in early trade today. That doesn't look like good news for Indian markets. Moving on to commodities. Well, commodities have been in focus this month, especially oil prices. Well, oil prices have corrected marginally versus yesterday. So they're just above that $86 a barrel, and Brent is just above the $87.5 a barrel. When we look at oil over month to date period, it's up 13%. Across December, it was up over 10%. And across the last 2 months, it's up 22%. So really strong gains that oil prices have posted. Moving on to gold. Gold edged higher as well. It's now above the $1840 an ounce mark, and now gold is very close to the highest it's been since November. Of course, traders seeking an inflation hedge. Moving quickly on to the dollar index, that's corrected after surging on Tuesday. It's down to 95.5. The 10-year treasury yields also topped 1.9% and have corrected back downwards. They are at 1.84% now, and Bitcoin is at the 41,500 mark. That's broadly how markets are shaping up early this Thursday morning.